I believe a lot of people today who have wealth, they know that something is wrong in the financial system. They know it's not sustainable. They know it's going to collapse one day. They just don't know when. So these people, they say to themselves, okay, the financial system collapses. I want to have something safe. You know, it's a store of value. That is the meaning of store of value. Then they buy a ton of gold. Well, I mean, the global economy has definitely recovered from the COVID lows. But if you look at the world in general, then the peak of economic activity must have been sometimes in 2018, 2019. Then we had the COVID slump and the recovery, but the recovery never came quite to the level of activity in 2018, 2019. Now, I'm talking here about the economy price adjusted because whatever statistics we look at, we have to take into account that today the price level is approximately 30 to 40% higher than it was in 2018, 2019. I mean, COVID is a massive scam to create inflation and to increase the wealth of the richest people and impoverish the middle class and the lower classes because their incomes went up, but the incomes went up less than the cost of living. I mean, I find it very difficult to encounter anyone in the world among the middle class people who can tell me honestly, look, my life today is significantly better than in the years 2015, 2018. Most
No.
people will tell you we had to cut down on some expenditures. Well, in Thailand, interest rates for desperate borrowers, I mean, borrowers that will not obtain credit from a bank, and most people will not obtain credit from a bank. They pay 10 to 20% interest a month, not a year, a month.
Holy crap.
And you look surprised. Well, around the world, there's an industry that is thriving because people are desperate. They need, if someone gets sick in the family, they have to borrow money on short term. Then they have these debts, and usually it's impossible to get out of a debt at 10% a month. You just can't make it. Look, economics is a very bizarre science, or it's not a science, but sort of a hocus pocus. It's well established that free trade, say, is very favorable for economic growth and for the prosperity of people. I mean, let's say you have a country like Italy, they produce olives and wines. Why should they produce, high-tech things? And you have a country like China, they have cheap labor and a well-educated labor force and scientists in quantities that none of the European countries or the US can supply. So these countries, they can supply goods at competitive advantages to other countries. So why should you not buy from these countries that can produce something cheaper than you can? Why not? Now, does it have an impact on your industry? Yes, possibly, but it frees your industries to focus on things where you would have a competitive advantage. Say the US, one sector of the economy that has clearly miles of advantages is agriculture because it's so productive. I'm not saying it's very healthy, it's very productive. So trade, I think, is really very essential to global economic growth. And if you cut it, the empirical experience is like in the Great Depression. They introduced tariffs and it prolonged the depression. Now, I focus as an investment advisor, I focus always on how do markets react to news. Say clearly the stock market doesn't like tariffs.
No.
And I've written already in November the Trump top, because I think the stock market is about to make or has made a major, major high from where it will not recover for a very long time. But I have to classify this statement. The stock market may make a new high in nominal terms, but not in inflation-adjusted terms. Say if the inflation is 20% between now and 26, end of 26, the stock market only goes up by 10%, then we've lost in real terms 10%. It's still worth something, but the purchasing power of money is continuously going down. There's no question about this.
Yes.
Now, can we experience a period of deflation? Like in the Depression in the 30s, we had deflation. This is a possibility. And especially, you know, the inflation term is misunderstood. When houses go up, people call this a booming housing market. When stocks go up, they say it's a rise in stock prices. But when the housewives go shopping in a supermarket and the prices go up a lot, then she calls it inflation. Well, it's a bull market in food prices. It's the same. So inflation is actually an increase in the quantity of money. Now, the money flows into the economic system unevenly. It's not that then prices all over the place increase evenly.
Yes.
No, they go up like last year. Cocoa went up like a rocket. No, in 2023, 2024, coffee went up like ballistic missile.
Yeah.
And so it's very irregular. And the investor, he sort of has to jump from one ship to another in his investments to optimize the returns. I don't believe in this return optimization. I think, you know, the people lose and they win and so forth, but asset prices tend to go up. Now, there's a point at which asset prices no longer go up. This was reached already before in, say, 68 to 1971, 72. Then afterwards, asset prices went down for a long time. Or Japan, it was reached in 89. And afterwards, real estate and stocks went down for a long time. And I think we're here at the juncture where asset prices no longer go up a lot. I mean, home prices, they cannot go up all that much because the affordability is so low. You understand? You can have house prices at the sky, but you need someone to buy it. And most people can't afford them. I think this is a very good question because the question relates to the following. If you have a market and there's a heavy concentration of money into a few stocks, say in 73, the Nifty 50 stocks that included stocks like Sears, JCPenney, Xerox, Polaroid. Most of these companies went out of business actually. And then when they go down, they usually drag down everything. Like after 2000, when the Nasdaq went down, it dragged down everything for 2 years.
Yeah.
But some things didn't go down a lot, like resource stocks and gold miners and so forth. But nevertheless, they went down. And then you have the other model, which is Japan after 89. Japan went down and other markets started to soar because the money flowed out of Japan into other markets. And I'm still debating whether this will be the case, but I could imagine that the US, the Magnificent Seven, tumbled by 50 to 70%, and the money flows into other sectors of the market, probably not in the US, because this year you look at the European stock markets, they're up, say, between 15 and 18%. And the US, the S&P is flat and the Nasdaq is down. The fact is, I've been recommending and holding gold physical for at least, say, 40 years.
Yeah.
And I keep on buying, regardless of the price. But I'm not taking additional major positions at the present time because if I look at the price level in the 50s and if I look at the price level here, then gold has been a very good investment to protect my purchasing power. In other words, gold is not undervalued. But if I look at the financial system in the world and you look at all the money that is floating around and the quantity of billionaires that you have in the world, then you and the quantity of central banks, then you have to ask yourself the question. We have the quantity of money, we call this the monetary mass.
Yeah.
And in the world, it's increased by this much, say, whatever. And then you have the quantity of gold, and it was maybe 1980 this, and now it's this. So per unit of gold in the world, say per ounce, the quantity of money has expanded dramatically. And I have a lot to do with, say, professionally, not when I go out at night, but when I'm working. I have a lot to do with wealthy people that need to preserve their wealth. Say someone has $100 million. I know very few people who have more than $10 million in gold. Most of the people, they say, I hold gold. What they mean is they own 2 kilos of gold or, 100 ounces or something like this. But people who own or have 30% of the assets in gold, this is a tiny number of people. And I believe, and this is also reflected in the performance of gold, physical gold, and gold shares. I believe a lot of people today who have wealth, they know that something is wrong in the financial system. They know it's not sustainable. They know it's going to collapse one day. They just don't know when. So these people, they say to themselves, okay, the financial system collapses. I want to have something safe. It's a store of value. That is the meaning of store of value. Then they buy a ton of gold.
Absolutely. Absolutely.
You know,
We try
and the central banks do the same.
to.
They
Oh
are
yeah.
faced with a US dollar that is likely to go down one day meaningfully, or faced with a system where the US has repeatedly, frozen the assets of foreign countries, not once, repeatedly. Then
Yes.
they say to themselves, well, we want something safe, so they buy gold. I mean, I really believe when the gold shortage theory will, become more popular, that gold could have another move up. But I'm not holding gold because I think that the price will go up a lot. I'm holding because it's safe, but there is a risk. Is the F governments. They can one day say, "Oh, it's unfair that some people who held gold have become so rich and others suffered, so we take it away or we declare it as illegal." They've done it before.